Hello, everyone. Welcome to the market opening bell on Thursday, August 7th, your 10-minute guide to the stock market. Hong Kong stocks fluctuated on Wednesday. The Hang Seng Index opened 38 points lower, dipped 96 points to 24,806 in the morning, but later rose 100 points to 25,002. Before noon, it closed up 8 points at 24,910, marking three consecutive days of gain, up 402 points or 1.6% in total. The share index fell 18 points or 0.2% to 8,932, while the Hang Seng Tech Index rose 11 points or 0.2% to 5,532. Total market turnover was 215.2 billion Hong Kong dollars. Southbound trading turnover was 125.9 billion dollars, with southbound net inflows of 9.485 billion dollars. Notably, net purchases included Tencent $1.518 billion, Alibaba 876 million, SMIC 611 million, Xtaipei 532 million, Ecoso 137 million, and Li Auto 119 million. Net sales included Xiaomi 229 million, PopMart 223 million, and Meituan 147 million. Southbound funds have bought Tencent for 10 consecutive days, totaling 5.944 billion. Alibaba for 3 days, 2.115 billion, and SMIC for 3 days, totaling 951 million. Technically, the Hang Seng Index hit a high of 25,002 points, partially filling the gap between 25,000 and 25,082 from last Thursday's drop, but failed to hold above 25,000, indicating resistance at that level. The closing index of 24,910 is close to the 20-day moving average of 24,880, which is rising at 50 points daily. Caution is needed as it risks falling below this average again. A-shares opened lower but closed higher. The Shanghai Composite Index rose 16 points or 0.5% to 3,633, a new yearly closing high. The Shenzhen Component Index gained 70 points or 0.6% to 11,177. Combined turnover for Shanghai and Shenzhen was 1.734 trillion yuan, up 138.1 billion yuan from the previous day. The renminbi central parity rate fell to 7.1409 against the US dollar, down 43 pips from yesterday, the lowest in 3 days. In Hong Kong, gold stocks rose across the board, with China Shenhua up nearly 3%, hitting a record high. On August 1st, China Shenhua announced plans to issue shares and pay cash to acquire coal pitted coal power and coal to oil gas chemical assets from the National Energy Group, along with raising supporting funds. This restructuring will significantly impact coal industry concentration and energy sector reshaping. Over the past decade, the top 10 coal companies' output share rose from 41.9% in 2015 to 49.2% in first half 2025, with National Energy Group's market share increasing from 11.8% to 12.7%, solidifying its leading position. Cathay Pacific shares plunged nearly 10% to $10.85 after its earnings release, with heavy trading volume. In first half 2025, revenue was for 54.3 billion Hong Kong dollars, up 9.5% year on year, but operating profit remained flat at 5.9 billion dollars, below market expectations of 6.6 billion dollars. Shareholder profit was 3.651 billion dollars, up 1.1%, with basic earning per share at 56.7 Hong Kong cents and a proposed interim dividend of 20 Hong Kong cents per share. Cathay's underperformance was due to lower than expected passenger yield. Passenger revenue was 34.2 billion Hong Kong dollars, up 14%, with passenger volume in revenue passenger kilometers up 30%. The airline carried 13.6 million passengers, averaging 75,300 daily, up 27.8%. Cargo revenue was 11.141 billion Hong Kong dollars, up 2.2%. Subsidiary Hong Kong Express reported a pre-tax loss of 524 million compared to 66 million dollars profit last year due to passengers avoiding Japan amid earthquake rumors and new routes needing time to mature. The group noted short-term challenges for Hong Kong Express, with Japan bookings recovering but not yet normalized. Cathay exercised its 2013 purchase rights to acquire 14 Boeing 777-9 aircraft with options for up to 7 more. The base price for the 14 planes is about 8.1 billion US dollars, equivalent to 63.2 billion Hong Kong dollars. Though discounts are expected to lower the actual cost, payments will be made in 5 installments, with the first 4 before delivery, and all aircraft are expected by 2034. Funding will come from bank loans, finance leases, sell and leaseback arrangements, and operating cash flow. The Hong Kong and Shanghai hotels reported first half revenue of 3.281 billion Hong Kong dollars, down 28.9% year on year. Losses narrowed to $289 million from 448 million, with a per share loss of 0.17 Hong Kong dollars. No dividend was declared. The Hong Kong Peninsula Hotel's revenue was $518 million, with occupancy up 15 percentage points, average room rates down 27%, and revenue per available room down 1%. Uni-President China reported first half shareholder profit of 1.287 billion yuan, up 33.2% year on year, with no dividend. Revenue was 17.086 billion, up 10.6%. Food business revenue was 5.382 billion, up 8.8%, accounting for 31.5% of total revenue. And beverage revenue was 10.788 billion yuan, up 7.6%, accounting for 63.1% of total. Gross margin rose 0.5 points to 34.3%, driven by higher sales volume and lower raw material costs. Gross profit was 5.864 billion yuan, up 12.2%. Many companies will announce earnings today, including China Mobile, SMIC, Swire Property, Swire Pacific A, WAF Real Estate, MGM China, HUTCHMED, Lian Paper, Lianman Chemical, Scilab, Manulife Financial, and Pacific Basin Shipping. Additionally, there is a new listing today, Sunshine Lake Pharma. U.S. President Trump stated that U.S.-Russia talks made significant progress as the Ukraine ceasefire deadline approaches, and Federal Reserve officials hinted at the possible resumption of rate cuts soon, boosting U.S. stocks. The Nasdaq rose 252 points or 1.2% to 21,169. The S&P 500 gained 45 points or 0.7% to 6,345. The Dow increased 81 points or 0.2% to 44,193. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 68 points or 0.9% to 7,451. Apple surged 5% after reports that the White House will announce $100 billion reinvestment in the US alongside Apple after market close, and Apple is reportedly minimally affected by India's new tariffs. On Wednesday, the White House announced that President Trump will impose a 25% additional tariff on Indian goods purchased with Russian oil, effective within 21 days, on top of 25% tariff on specific countries, set to take effect overnight, resulting in a cumulative 50% tariff. For earnings, AMD reported a Q2 profit more than doubling but fell short of expectations, and the MI308 chip sales licensing to China remains unapproved, causing a 6% share drop. Walt Disney reported a Q3 net profit of $5.94 billion, up 1.4 times year on year, surpassing analysts' $2.3 billion forecast, driven by a one-time tax benefit from its Hulu streaming service. Adjusted earnings per share was $1.61, beating the $1.45 expected. Revenue grew 2% to $23.7 billion, meeting expectations. Theme park revenue rose 8% to $9.1 billion from $8.4 billion last year, exceeding the $8.2 billion forecast. Disney added 2.6 million subscribers to Disney Plus, Hulu, and ESPN Plus since the last quarter. Due to stronger than expected subscriber growth, Disney forecasts its streaming business operating income at $1.3 billion for the fiscal year, up from $1 billion previously. The experiences business, theme parks and cruises, is expected to see 8% operating income growth this year. McDonald's reported a Q2 net profit up 11% to $2.25 billion, with adjusted earnings per share of $3.19, above the $3.15 expected. Revenue rose 5% to $6.84 billion, also beating forecasts. Same-store sales grew 3.8%, the largest increase in nearly 2 years. Our stock pick today is Horizon Robotics, stock code 9660. Horizon Robotics primarily focuses on providing advanced driver assistance systems, ADAS, and high-level autonomous driving, AD, solutions for passenger vehicles, holding a leading position in the ADAS market. By the end of 2024, it commanded over 40% market share in China's OEM ADAS market and ranked second among independent third-party high-level autonomous driving solution providers in China. In 2024, it achieved record high delivery volumes and vehicle model designations, with approximately 2.9 million product solutions delivered and a cumulative delivery of about 7.7 million units. The structure of the intelligent driving market is undergoing significant changes. By the end of 2024, approximately 65% of passenger vehicles in China were equipped with ADAS functions, with about 80% featuring basic ADAS and 20% equipped with highway or urban ADAS capabilities. Since early 2025, automakers have been promoting the democratization of intelligent driving, extending highway ADAS to mainstream models priced around 100,000 yuan and introducing urban ADAS to models priced around 150,000 yuan. This shift indicates that in the medium to long term, the proportion of vehicles with basic ADAS will be approximately 15%. Those with highway ADAS will account for about 35%, and those with urban ADAS will reach approximately 50%. This market structure transformation presents significant growth opportunities for the group as the industry transitions from basic ADAS to full scenario urban ADAS. The group's product portfolio will gradually upgrade from mono to pilot and ultimately to HSD, increasing the per vehicle value by several to 10 of 5 times. Currently, the group has secured over 100 vehicle models for its pilot solution, with some already in mass production and others rapidly progressing toward mass production. Additionally, the group has been designated by multiple automakers to provide solutions for over 10 vehicle models equipped with HSD, with the first model expected to enter mass production within this year. In June this year, the group conducted a share placement, raising net proceeds of 4.674 billion Hong Kong dollars. Of this, $674 million will be used to accelerate business expansion, particularly for collaborations with Bosch and Denso. $2 billion will be allocated to R&D investment to further enhance technological capabilities, and the remaining $2 billion will be used for general corporate purposes, including procuring processing hardware, inventory related to other product solutions, and repaying bank loans. Recommended buy price 7.2 Hong Kong dollars. Target price $8. Stop loss $6.8. I do not hold the aforementioned stock.